Hello everyone, welcome back to my channel. Welcome back to another expiry analysis. Hopefully we have a nice profitable expiry tomorrow. As always, let's begin with US futures. So, after the last big candle that we saw from a very strong support, which we had already discussed around Friday, there's a little bit of profit booking because if you notice from the lows of 32,600, the market had rallied all the way to 33,200. So that's like 700 point rally. So all the way from there, if at all we have fallen down 200, 250 points, that's all right. That's a healthy retracement. I'm still bullish in nature looking at the chart structure. Until we close below 32,500 on a daily, I will not become bearish in US markets, which will eventually also illustrate on our own charts. So until then, I am going to be bullish in nature. And one more reason for this conviction is if we switch our charts to dollar. Allow me a minute. Yeah, so if at all we switch to dollar on a daily time frame, we have approached a very strong resistance from where the markets have always fallen. So going up in a vertical trend like this and suddenly breaking it, I don't think that's very feasible, or whether it's actually going to happen that way, because even if it does, then it's more likely a trap than a real bullish breakout. So in the meanwhile, until some consolidation happens here and or at all we retrace and go below the 200 DMA, so until then, we could see some relief rally, a technical bounce in our markets, and not even a technical bounce. Whatever happened today, today's price action is not bearish in nature. It's just a profit booking and a gap fill. So anyway, let's dive in directly into that. To begin with, Nifty on a daily, yes, it definitely is a big red candle. It's not a bullish hammer. It's not green. So it is a hammer because there's some sort of buying from the bottom, from around 18.5, 480 levels to 18.5. That's just 50 points. That's not a lot. Banknifty is rather stronger and more convincing for a bullish setup. But anyway, the reason why I think this candle is here is to fill the gap. And that could be one of the reasons, because if at all this was bearish in nature, right, there wouldn't be a lot of buying from the bottom. And we could eventually fall down all the way to 18,420, right? But there was a lot of build up. There are puts written at 18,500. There was technical support because this gap was pending and now that gap is filled. So I consider this as a gap fill. Any daily closing below this low of 18,490 is where I'll become slightly bearish in nature. But for the reality, as far as we are above 18,400, I'm not bearish. It's just a healthy retracement after such a long overstretched rally. So until we are around above 18,400, it'll be difficult to hold short positional trades. We cannot short the market then. With a daily closing below 18,400, yes, definitely we'll look for shorting opportunities. And now if you break down to an intraday time frame to analyze how we can play the expiry tomorrow, I'm expecting a bullish expiry. But the reason being because I was waiting for this gap fill, and this is really good buying zones where the price has gone up from 18,500. We are still managing to close above 18,500, which is a nice bullish sign in a rally like this. So the trade plan for tomorrow, right, if at all, there are three ways we can play this out, whether it's a flat opening, a gap up opening, or a gap down opening. So in any case, it's a flat opening. As far as the price opens anywhere between 18,580 and 18,500, this is an absolutely non-tradable option buying zone. Do not buy calls, puts, whatever. Stay out of the market as far as the market's hovering between this, because it's noisy and you can get stopped out considering it's an expiry. And also, since I'm expecting a trending expiry tomorrow, it could be in either direction, but since tomorrow's expiry, and if at all you're new in the markets, I would recommend that you trade with the next week expiry contracts, not tomorrow, because it could be too volatile and you need some time value on your hand to make more logical decisions. So I would recommend that. However, in a flat opening between 18,490 and 18,580, this 90-point range is non-tradable as an option buyer. We are not trading. If we open directly above 18, or if we open slightly higher or above 18,580 and we sustain there for the first 5 minutes also, then we can do a quick scalp for around 50 to 60 points of a target around 18,640 levels, where I'm guessing if at all we reach there during the first half, we might spend more time consolidating and then eventually break out. That's the plan in case of a gap up or a flat opening, which tends to have a 15-minute candle close above 18,580 in that case. And what I think it could look like is the expiry could look like if we at all open somewhere here or close above this, we could come all the way, consolidate some, and around 12:30 or 1, if at all you see a breakout, then I would want you to participate in that, not just intraday. Then you can also carry forward that trade overnight for Friday and probably even Monday. So that's in case of gap up opening. Now where things could get dicey for bulls, where we could see a small bit of a sell-off, is if at all if we open strongly gap down, right, or we open negative biased gap down, and then we have a 15-minute candle closing below 18,400, a lot of put writers will be triggered, their stop losses will be triggered, and then we can directly slide down all the way to 18,330 and eventual final target being 18,220. So we have targets on either side. However, if you're playing longs, be conservative with your position sizing, because I'm expecting some consolidation before a breakout over here. So above 18,580, even if you're long, book majority of your position, 60-70% of your longs around 18,640 levels, and wait for a significant consistent 15-minute candle closing above 18,650 to build fresh longs, intraday or positional. So that's Nifty. And as far as Banknifty is concerned, on a daily, Banknifty structure looks more promising, more bullish, because from the bottoms of 43,800 to close all the way around 43,150, that's 350 points of recovery, right? So that's great recovery. And again, we have, if you notice the technical analysis and price action over here, it's beautifully worked out, because in this zone, right, until the price was hovering, and then we managed to break out, and if at all we jumped all the way and closed down the lows today, right, around 43,800, 43,700, then this entire move, the 2 days of Monday and Tuesday, this would be considered a bull trap, where the people, the retailers, were lured into buying calls and expecting a bullish rally, but to trigger all the stop losses, the markets come back down and then eventually go and test the lower end of the channel. So that would have been a trap. But considering we are closing above a very strong resistance from earlier, which should now technically act as a strong support. So as far as we are above 44,000 on daily, we are bullish in nature. We can hold on to our longs and expect bigger targets. So our daily first target is 44,500 from here on the long side, followed by 44,750 to 800. That's the final target where I'm looking, after which there might be a retracement or consolidation, but that could be the long targets on a positional daily chart. And now we don't initiate any daily short positions until the market gives a closing below 44,000, right? If we close below, especially today's low, if we close below 43,800 on a daily, then our first target is 43,400, below which the market structure will entirely change and we could become extremely bearish in nature. So let's wait for that. If at all that has to play out, give the market some time to show it to us. And especially for tomorrow, if we are trying to play the expiry together, what my setup for tomorrow is going to be, if you open flat anywhere between 44,280 and 43,800. Now I understand it is almost like a 500 to 550 point range, but as an option buyer, you do not get opportunity every day. You have to wait for the setup or the levels to walk up to you before you can initiate a fresh position, because that's how you play with volatility being an option buyer. So this range between 43,820 and 44,270 is non-tradable for an option buyer. No calls, no puts, absolutely no trades. Now in case 2, that's a gap up. If you open directly gap up, right, above 44,270, that's gonna trigger a lot of shorts over here, especially looking at the last 15 minutes where people saw sell off from the previous support. A lot of people would have been convinced that, you know, this was just a retest and must be holding overnight puts. So in any case, that plays out like that. If you open above 44,280 or open around 44,220, 230 and have a 15-minute closing above 44,280, we are going to initiate fresh longs for tomorrow's expiry, with our first target being 44,450 to 500. And I would want you to book your longs there, allow the market to consolidate, just how we saw in Nifty, consolidate until 12:31 p.m. And when you see a breakout, a strong bullish breakout above 44,450, then you should participate in that long side of the trade and sit with it. You can carry it overnight also, because then market structure will be super bullish and we will see 44,700 to 800 levels. However, in case of a strong gap down, if we open anywhere below 44,000, our first immediate target, we can short the market. The first one would be rather scalping in nature, because below 44,000 we have only like around 170, 180 points. So our first target is 43,800, below which, if at all you see a strong 15-minute red bearish candle closing below 43,800, then you can initiate fresh shots for the first target of around 43,600 followed by 43,400. So these are the three scenarios that could play out tomorrow, and I'm going to trade tomorrow, and if at all there's any update during market, I will try my best to post it on Instagram. However, these levels should come in handy, and I wish you guys the best of expiry tomorrow. Be safe with your capital, protect your capital. That is what trading is all about. It's not how much you make or how much you lose. That is a part of the game, but protect your capital and avoid FOMO in case of a big gap up. If you open somewhere around 44,300, 400, do not chase the gap up. Or even if you open directly below 43,800, we might see a bearish trade, but don't try to chase it. If the momentum has gone away from your hand, just accept it, because another is going to come and we're going to find a better setup to trade. So all the best for tomorrow's expiry. I wish you all the best. Do well and trade safe. Keep a watch on your position sizing. And hopefully I'll see you guys tomorrow with another video, and all the best, guys.